Welcome back to Making Money Matter, ladies and gentlemen. I've asked Jonathan Trewartha. He is the CEO of Lincoln Minerals. The ASX code is LML, listed on the stock exchange. Now, I spoke to Jonathan I think it was about 4 months ago. We talked about massive iron ore project they've got, but they've come out with some news today about their Kookaburra graphite project. But I really want to understand what the market's missing. Jonathan, great to have you back. Thanks, mate. But I'm going to be tough on you today. I want to know what's going on. And it's interesting project. There's lots going for it. We'll get into that. But investors just don't care.
Kerry, thank you for having me.
Sorry. Talk about starting off on a negative, but you know what? They don't care at the moment.
Yeah, no. Well, we do. We believe that China controls, we know China controls nearly 99% of all final product for graphite. And we don't think that's, no one wants it. I've been over to Europe, USA, Australian, they're all trying to get off the supply chain. And we're in the perfect position to actually help the West get off the supply chain.
Let me just ask you this. You just said China controls it all. Is the graphite that China controls within China, or are they bringing it in from places like all over the world? Like, talk to us about where it's coming from.
Yep. So the final product that goes into batteries is a spherical graphite, which is basically the final product. So there are other countries that do produce it and then sell it mostly to China. But everything at the moment goes to China for the final product. And 50% of graphite is in every battery. So if you ever want to stop the EV market, you only have to stop graphite.
Okay. So your product, which, by the way, ladies and gentlemen, it's down in South Australia, which, look, I'll give them a tick. Great area to do mining, very, very supportive of the resources sector. But wouldn't you still have to sell before I get to the detail, wouldn't you still have to sell your graphite to China to make it into spherical graphite to put it into that battery?
At the moment, the West is doing a huge effort to invest in downstream processing. There is a small percentage done out of South Korea and out of Japan, but it doesn't, compared to the whole, it's still 99% controlled by China at the moment. But they're growing and they're investing in that. So we will be looking for a partner outside of China.
Let's go back into what this Kookaburra graphite project is all about and why investors should care. I was a bit harsh on you at the beginning there, saying investors don't care. Well, because they don't, because you're 11 million market cap, you've got a couple of billion shares on issue. So it's been a bit of a hard slog. And what I want to know is, why should they care? What is it that you're doing? Because you've been in the hot seat not that long.
Yep, so 8 months now.
Yep. So tell me about that 8 months. Tell me about how you perceive you're adding shareholder value, because the share price hasn't moved that much, but perhaps the market's missing something.
Well, in fact, it has held up, and we've raised $2.5 million in that time. So we've actually increased the share price. It was bouncing around 0.5 to 0.6. Yeah, and at the moment it's down there again, but we've done a capital raise. In that 8 months, we've doubled the resource. We've increased the high grade. We've identified and unearthed the 1.2 billion ton magnetite asset, and we've also identified a very strong uranium asset. The focus at the moment is our graphite. And currently doing a PFS. And our strategy, we've recognised that we have an excellent chance. We're well positioned to be the first graphite mine in Australia, and we're going to go for it.
Now that's a big call. That's a very big call. We're going to be the first graphite producer mine in Australia. How can you possibly say that? Because I know how long these things take to get into production.
Yep. So our aim to be the first is there's 4 main reasons. One is we've got a high-grade core at surface, which means it's a lot. We can start low operating costs. The second one is we're surrounded by infrastructure. Where the road's straight in front, the power line's 5 k's away, and the water's 12 k's. So we've got the water, we've got the power, we've got the road access. The next one is we've already got a mining lease and a nearly completed environmental approval plan, and so it's a low cost, very quick exercise, quick for the government to get that done. And the best, well, for us, we're at the bottom of the cycle for the metal price. Let's say it's around about 600 US at the moment. There's now a split coming. Benchmark has published the first one I've seen, and that's saying that there's a West price and a Chinese price. The West price is 700, the Chinese is 500, and we believe that's going to grow. Even at 700, I don't think there are any mines in Australia that, except for possibly us, and that's what we're doing the pre-feasibility for. We may have a chance at 700, but I doubt that there are no mines, we believe, that can operate. They're looking at more like 900 to 1,000. So we've got that window of opportunity to actually because of our competitive advantages, to get in there and develop it. And the other one is I'm a developer. I mean, I've developed several mines. That's what I do. I build people around doing that, and it's what I love. That gives me a lot of confidence to know that we can do it.
What makes a good, when you say I'm a developer, what sort of skill set do you need to be a good developer?
You actually have to have the will to lean into problems.
Okay.
Every time. There are so many problems to develop a mine.
Yeah.
And there are so many reasons why you can just outsource it to a consultancy group, or and things just take time. You actually have to lean into every problem and think about ways to get around them. And it's just and it's an experience. The other one is knowing that you're on a short time limit. I work on a half a metal cycle. If you can't get from resource to finance within half a metal cycle for a junior, you might as well, you're struggling. And I know that, and I push everyone to get that done. And that's why I joined Lincoln, was because it already had a mining lease and a high-grade core. So
you said a moment ago, there were two things I picked up there. One, you think that we're at the bottom of the cycle for graphite. So you think that potentially the prices will increase. But if China has a stranglehold at 500, why would the price go up? Because we know the power that country has over price taking.
Yes, and that's why the West, as I said, the West is investing heavily into critical minerals to get off the supply chain. Okay. And they are actually forcing companies, automotives and all that stuff, penalising them to get off that supply chain. So that is what we expect, is a two-price system, and it seems to be starting to develop now.
So what you're saying is that some people out there will turn around and say, we'll buy product from you, but not if it comes out of China. Yeah,
we've been told. When I was in Europe, they said, we will support and buy, and all our manufacturers are coming under penalties over the next couple of years.
Really?
Yeah. And so we will support you if it's not out of China.
Why can China do it $200 a differential to the West? Is it?
Oh no, it can't. It's losing money at the moment. Everyone there's a war. There's a synthetic graphite war, apparently, between the businesses in China where they're trying to undercut, and that's why the price is down at the moment.
Okay, and they can only do that for so long. Okay.
Exactly.
We said before, and one of the things that, ladies and gentlemen, I often say to all of you when you're looking at things is it's people, it's projects, it's profits. Now, Jonathan, you said not that a moment ago that you want to be one of Australia's, well, you want to be Australia's first graphite producer. One of the things that I think might be missing in the conversation we've just had is mining permit, right or wrong?
That is correct. It now takes on average about 6 years to get your approvals.
Yeah.
We've already got a mining lease. We've already got, it was actually submitted, the environmental approval document. It was withdrawn because the company stalled back in 2017. And so that's already written. And we just have to, we're looking at a 2-stage project. We have to rewrite it. Oh, there's always more work. You know, the government always wants a new standard, so we'll have to fill that gap. But that's not a big exercise. We've also the initial we've got landholders that have already been through this. They know, they're encouraging us to get developing, which is a great situation.
What's your biggest challenge then? Again, I've got an audience out here that are investors looking for opportunities. And by the way, ladies and gentlemen, not financial advice. Do your own research, or annoy Jonathan. Don't annoy me. It's not financial advice. What's your biggest challenge right now?
The biggest challenge is our current market cap, because I would prefer. We are undervalued. We've got the graphite, the uranium, and the green iron, but getting that market cap up is really important to me.
All right. Well, one of the things I reckon will be a catalyst, correct me if I'm wrong, is getting that PFS out, because people want to see the economics. I mean, you say it's low market cap. Well, they want to see it. They want to see the proof is in the pudding.
Yep.
When's the PFS going to come out?
So I originally said that it was going to be fourth quarter. I'm now looking at September, October.
Oh, okay. So coming forward, that's good.
Yep. Yeah. I mean, if in terms of what we've achieved, if people want to know who to back, I mean, we've achieved, as I said, in 9 months, we've doubled the resource. We've identified our uranium. We've identified our green iron. We're starting we're doing our final test work for our BAM study, which is a downstream study. We've already started our PFS. That's not bad out of a capital raise of 1.7 million, and we've just raised another 2.5. That's not a bad 8 months achievement.
No, I would agree with that. But again, people, projects, profits. If you clearly, you'll have to do another capital raise, and maybe that's what people are waiting on. I don't know. But you think that even at these low graphite prices, that this project, the Kookaburra Graphite Project, could still go ahead, even at these prices?
Well, I feel that we're going to be around, my feeling, without this PFS being come out, will be around 700 to 800. With that US 700 coming, with a Western price coming up, looks like it's happening. That's about now. That's where I think we'll fall. But I know that compared to everyone else, there's only 2 people who've got mining leases that can do anything. That's us and Renascor. So everyone else, in terms of timing, are years away. And so in terms of Renascor to me is like a low-grade gold deposit. It needs a high price to enter, and then it uses a lot of capital equipment to drop its operating costs.
Right.
We're like a high-grade gold deposit that should be able to operate through the metal cycles.
What's going to drive that graphite price? I know it's always, you might just turn around supply and demand, but is it just supply and demand, or do you think that this argy-bargy between China and the West is going to potentially drive prices up. And especially, as you said just before, China's losing money.
Yeah.
Well,
There's a couple of things. One, at the moment, at the end of the day, it's non-sustainable price, and one at some stage they'll stop fighting internally. Second is the Western demand for Western product will increase. At the moment, no mines are starting up, and they're in fact with a low price, so that actually builds up tension for demand. And the EV market and all the battery markets is still growing, and graphite's not just EV. There's about 200 other products for graphite, so it's a market that's still growing. So it's been artificially repressed by the synthetic war, and yeah, we're expecting it pop.
Right. Are you confident? You said it's a pretty bold statement, Jonathan Trewartha, which will be Australia's first graphite producer. And I think you said a time frame of 18 months, which seems pretty crazy. But I say that, but at the same time, I often think, why does it take these companies 10 years to get into production? So it's kind of...
Yeah. So the 18 months is the finance, and that's doable. So for 18 months to have the studies done, which we will have the feasibility, the PFS and the feasibility done, the first half next year. Approvals with the final pepper, I would expect that to be done in the first half of next year. The finance, that's harder for me to judge, of course, but there are the government supports as well that we'd be looking at, and then and then we've got to get the sales agreement, which is actually the trickiest of all for the graphite.
Oh, is it? Why?
Yeah. They like. There's a lot of product testing from buyers, so you could have a buyer who comes along and says, "Oh, we like you, we like your product. Yep, we'll buy it." But then they test, because it's a chemical reaction in their batteries. They want to know how the other chemicals react as well. So there's a bit of a stepping process through that. So in terms of the 18 months to finance, to a decision to mine, I'm feeling that's a reasonable, and I've done this before, so it's not like it's not like I'm just pulling numbers out.
Okay, in terms of your background and your experience, this project, if I gave you from 1 to 10 in terms of grade of difficulty, if you like, how would you rate it?
I would rate it as a 6 for the feasibilities and approvals.
Right.
A 7 for the finance, and a 8 for the sales.
Okay.
So that's, I mean, in terms of, if this was a gold project, I could easily get it up. I could put my hand on my heart and say this will be done mid-year next year. But because it's an industrial mineral, and a lot of people don't get graphite.
Yeah.
So it is a niche market. So that's more of the risk than the actual approvals and the study, and even the metal price. The metal price will be the metal price. The project will operate at a certain metal price. It is a high grade. It will make money at some stage.
You said you're going to start small and grow it, and that's how you're going to get into production fast.
Yeah, so that's where we're going in with like we get 20% is our first bucket. The average grade of most deposits in Australia are 6 to 8. So and a stripping ratio of 1 to 1. It's attractive to go in small, and then demonstrate to the world, and then open it up.
All right. Well, it's interesting times for you, and one of the things, just if we can quickly not pass on these, but just comment on them. In my last conversation 4 months ago, we spoke about uranium, we spoke about the iron ore, but it feels to me that you want to develop the graphite, correct me if I'm wrong, get a partner for iron ore because it's massive.
Yep.
And potentially wait for the iron ore. Am I right with that? How's that?
Yes, yeah. So, and the other one is our uranium. We've got amazing assets and we're going to find a home for them.
Okay. What do you mean by we're going to find a home for them?
Well, we will, we'll divest in some way.
Okay.
We want to be the one. We're a developer, we're not an explorer. So we will, it doesn't fit with our portfolio.
So that's important for the audience to understand, is that Lincoln Minerals is a developer. You want to develop the Kookaburra Graphite project. The other projects you have are in the exploration phase, and therefore you're either going to divest, get a partner. They're not part of the core strategy, correct?
Yeah, Kerry, the iron ore is this, the Chinese spent $70 to $100 million. It's actually in the development phase, but it's just too big for a junior.
Okay.
So that actually is a well advanced project, but it's just it's not for us.
Okay. So the potential is that you could partner with someone and have maybe a small percentage of free carry, maybe?
Yeah. Oh, well, I mean, it is a massive deal. Green iron is very world focused. 10% of all carbon emissions come from making of iron ore.
Yeah,
they want to get that off. They want to get that down. That's a real thing. Half of Europe's smelters are actually having to recapitalize. They're actually looking at going to magnetite, not iron ore. So it's a huge market. But once again, it's not for a small company to try and develop. Our uranium, we will somehow find a home for that to be developed, and we'll get some benefit. And the shareholders will get benefit, but our focus is the graphite, and to develop it and be the first graphite mine in Australia.
All right. Well, I started this conversation, Jonathan, by being harsh on you and saying, quite frankly, the investors just don't care. So let's finish it up with, you tell us why they should care and sit up and take notice of you right now.
Okay. So we have got a well-advanced, low-cost graphite project that we're developing quickly, and we believe that we can be the first. We've got a mining lease already, and so that means a very short time period to get it approved. And we have got two other excellent assets, green iron and the uranium, that will add significant value and in not too distant future.
All right, ladies and gentlemen, I said before, Jonathan is a developer. He's not an explorer. He really has his hands on this graphite project, and let's hold him to it. He said September, October, that PFS will come out, which will be a very interesting time. But as he also said, and I think this is important for us to remember, they've got the infrastructure, they've got the power and water. I've spoken to people in the past, and that can sometimes be quite tricky. So to have a lot of those pieces of the puzzle, I again, as I said before, not financial advice, do your own research or call up Jonathan, but I think it's very interesting times. This is new management. He's been in the hot seat for 8 months, and turning that Titanic around and creating shareholder value is what Jonathan's all about. Thanks so much for talking to me today on Making Money Matter.
Thank you, Kerry.